US stocks closed slightly higher, bouncing from Tuesday's sell-off. Producer price index inflation falls 0.1% in August. Investors now await retail sales and jobless claims data due later today. Futures mildly in the green this morning. Asian markets start the day on a positive note following cues from Wall Street. SGX Nifty indicates a mildly positive start for the Indian market. Oil prices rebound, rise 2% in overnight session. The International Energy Agency flags demand concerns due to economic slowdown and faltering Chinese economy, but also expects higher switching from gas to oil due to higher prices. Brent back above the $94 a barrel mark.
India has been very responsible, and despite regulations, we had kept certain windows open to take care of all vulnerable countries.
Food Secretary Sudhanshu Pandey defends India's decision to restrict rice exports, says there is no need for any further interventions at this point, also adds that the edible oil is still not being sold at a normal rate, expects sugar prices to remain stable even though exports are the highest ever so far. Good morning. In the Mumbai News Center, I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines which we will discuss in greater detail through the course of the show. But first up, let's take a look at the Asian markets. They are largely higher after a negative session yesterday, and this after US indices inched higher overnight. We have Hang Seng, which is sitting with gains of around 0.4%. Taiwanese index, which was in the red just a while back, has actually recovered. It is up 0.2% as we speak. But even apart from that, Nikkei, Shanghai, Straits Times, all of them are up anywhere between 0.2 to 0.6%. Additionally, in China, central bank has kept one-year medium-term lending facility unchanged at 2.75% as was expected. Let's talk about the US markets now. Wall Street actually ended a choppy trading session higher on Wednesday with the Dow Jones up 30 points, the S&P 500 up 13 points and the Nasdaq Composite gaining 86 points. CNBC's Sarah Eisen gets us a wrap of all the action on Wall Street.
Stocks here on Wall Street opened higher, then lost those gains in what looked like a failed attempt to rebound from yesterday's big sell-off. But when the closing bell rang, a late surge had brought all three major averages into the green, but not by that much. The Dow ended the day with a small gain, the S&P finishing up 1/3%, and the Nasdaq closing up 0.75%. It was a government report showing consumer inflation remains hotter than expected that sparked yesterday's selling. Today, a slightly more encouraging number on wholesale prices, producer prices. With a lot of help from falling energy costs, they did fall 0.1% in August compared to July, but they're still up almost 9% over the past year. And the state of California filing a major antitrust suit against Amazon, accusing it of penalizing third-party sellers if they offer lower prices on other sites. The company argues it has the right to avoid highlighting products that aren't competitively priced. That's the action from the U.S. market. Back to you in Mumbai.
Some recovery after a massive sell-off. That's the U.S. market action. But let us also get you some important market opinion coming in from Mark Mobius of Mobius Capital Partners and Ethan Harris of BofA Securities. Listen in.
If they go up 1 or 2% at each meeting, then they can get there pretty quickly. And it seems to me that if they really want to do something and have some effect, they've got to have much bigger jumps in their inflation target rate. I think the game plan is if you want to beat inflation, you've got to raise interest rates. And they are not looking at the stock market, or they shouldn't be looking at the stock market if they're working according to their rules and regulations in their central bank. They should be saying, look, we've got to have stability. In order to do that, we've got to raise interest rates. And that means do it quickly. In other words, try to hit it as quickly as possible. Otherwise, it can get worse.
And it's really not the speed of hikes in the short run. That's kind of, they're catching up now. This isn't a hawkish Fed. They're just catching up. They started 6 months late, and now they got to go really fast. The real question is, how far do they go? When do they stop? And how long do they keep rates at very high levels? And that we'll only learn gradually over time. They themselves don't know where they're heading here. But I think a reasonable forecast has to have the funds rate going at least above 4% and conceivably as high as 5% in order to get that recession they need, unfortunately, to create to get inflation under control.
Okay, red hot US inflation, and that is some expert opinion coming in. But to the final update on our global market wrap, European markets ended lower for the second straight day, with the French CAC 23 points lower, the German DAX slipping over 1%, and you had the British FTSE closing with losses of over 1.5%. All right, that's the global market action. How will these overnight cues impact our own markets? We have been in a world of our own, but we have our research team joining in with this trade setup. What are the stocks that are likely to be in the news and the action from the F&O space as well? Hey guys, a very good morning to all of you. First up, Sonia, let me come across to you. What is the market setup looking like today?
So, well, yesterday was a really good day, right? I mean, despite the very weak global cues, we had a stunning intraday recovery led by the banks as well as cement stocks. Yesterday, the Nifty Bank gained more than 1,100 points from the lows. So one thing is very clear about this market, that the buy on dips trend is something that continues. In fact, the Nifty Bank closed above the 41,000 level by the end of trade. The global markets, though, they ended absolutely flat. The Dow was up almost about 30-odd points. It's an important day for economic data. There's a raft of economic data that comes out today: retail sales, import prices, jobless claims. And the US Fed officials, as we know, next Tuesday and Wednesday are going to be meeting, and there is an expectation of a base case of a 75 basis points rate hike and an upper case of 100 basis points rate hike. So that is what the street is pricing in right now. Brent crude prices have risen 2% on account of supply concerns. Brent is back above $94 a barrel. In terms of the flows, after many days, FIs have sold about 1,400 crores in the cash markets. DIs have bought, but a very small amount, just about 187 odd crores. But the mood pointed that this market has been buying every dip, and yesterday was proof of that. Even if the market does see a bit of a tentative move today, I reckon that in spaces like financials, where there's been large delivery-based buying, cement has seen good delivery-based buying as well. These are pockets that will continue to garner attention. Back to you.
Okay, all right. That is the market setup. Now going across to Vaishta, who will list out all the stocks that will be in focus today. Good morning, Vaishta.
Good morning, Sonal. Well, first is for PVR, wherein the investors, including Grey Birch, Plenty PE and multiple Ps, are to sell up to 7.7% in PVR via the secondary market today in a price range of approximately 1,852 to 1,929 rupees per share, which is leading to a total transaction value of 900 crores. Moving on to GR Infra Projects, wherein the promoters sell up to 5.9% stake in the company via an offer for sale. For Balaji Amines, the company completes the phase 1 of the Greenfield project and announces further capex for adding new capacities in phase 2 of the Greenfield project. For KPI Green Energy, the company has received a new order for executing wind-solar hybrid power project of 4.2 megawatts. And the last on my radar is Tamil Nadu Mercantile Bank, wherein the company is going to be making its market debut today with a final issue price which is fixed at 525 rupees per share.
Okay, all right. Those are the stocks in news and in focus today. Of course, PVR is a source-based news. Finally, Nigel is joining in with all the cues from the F&O space this morning. Hey, Nigel.
Well, morning. You're just making the point that yesterday the Nifty was fairly resilient. But at the end of the day, the point that you take home is that the bears, they are coming to defend the 18,100 odd mark. And if you look at it in the last couple of trading sessions, we're going near that level. And from there, we're seeing some bit of supply. The FI data, in fact, is a little bit skittish. If you're looking at it. And the bears, they are putting in a fight to defend that 18,100 odd mark. Yesterday, the FI sold the net institutions, that's the FI and the DI data together. That was close to around 1,100 crores in terms of a net sell number. What did the FIs do in the F&O market? Well, they added shorts big time and they unwound some longs. So they continue to remain net short on the index. But that's not really the point. On the index option side, well, they bought puts big time. And the bigger problem is they're writing more calls now. So yesterday they wrote close to around 31,000 call contracts. Which of the strikes that were active? The 18,000, 18,100 calls. Both of them fairly active. Between them, close to around 40 lakh shares were added. So what's the trade then? The bears appear they want to defend that 18,100, 18,150 odd mark. Support is seen at around the 20 DMA. But given the fact the SGX Nifty is suggesting a big gap up of close to around 70 points odd, risk reward may not favor buying that gap up. So maybe you wait for a bit of a dip and we'll have a fresh breakout only once that 18,100 odd mark is crossed. Back to you.
Okay, all right. That is the market setup. Thank you, Vaishta, Nigel and Sonia for joining us. With that, we'll slip into a break now. Up next, Food Secretary Sudhanshu Pandey defends India's decision to restrict rice exports. More on that after this very short break. Stay tuned. Hi, welcome back. It's time to get you some important voices from the corporate world. My colleague Shilpa Ranipeta spoke to Anshu Malik, who is the CEO of Adani Wilmar, and discussed trends in edible oil consumption and festive season demand as well. Let us listen into excerpts from that conversation.
The edible oil prices over the last 1 year has come off sharply, particularly in the last 3-4 months. We all companies have passed on all the prices to the consumers. With this lower prices, the consumption is bound to improve because at a lower level consumption at the economically lower sections, they tend to consume on rupee basis and not on quantity basis. So they buy at 100 rupees, they would buy oil, whatever oil they get. So now they will get a higher quantity, and hence the consumption is bound to increase at least the lower strata of the population. At the upper end, consumers will upgrade on the brands. We expect middle income families to get back into their old brands, which were their preferred choices. And consumption here also is likely to increase, but at the lower end, it will increase more.
Right. And what are your festive season demand growth expectations also this time? It's sort of the first near normal year that we're seeing. Any rough numbers also that you can give us with respect to growth that you're expecting during the festive season?
See, the first half has not been good because of the peak summer and then the high prices. But over August onwards, as the prices have come down, that has gone into the consumer's hand. So consumers are expected to increase the purchase. But this year the festivals are earlier than last year. September and October will be a big month where both Dussehra and Diwali will be celebrated. Next, up to Christmas, we see a great boom in edible oil consumption. At these prices, consumers are very comfortable and they're very happy. It will bring all-round reduction in prices of all other food products because edible oil is a major part in the cost part of it. So we see this year the festivals will be very good.
Okay, that's the word coming in from Adani Wilmar. So let's continue with this theme and talk about what's happening as far as food segment is concerned. Food Secretary Sudhanshu Pandey defends India's decision to restrict rice exports, says intervention was necessary as broken rice exports had zoomed between April and August. That's not all. Pandey says that India has been very responsible and that rice exports this year will be 17% higher than last year. He also said that India exported 21 lakh metric ton of wheat before the regulations and 24 lakh metric ton post that. Also, as the government gets set to allow 5 million tons of sugar exports, the Food Secretary says adequate stocks are available and he expects domestic prices to be stable.
The global supply chains across the world, they have got disrupted, and many countries who used to be traditional exporter of broken rice along with India, they have not been supplying that quantity, and as a result of which the entire push was coming from India. When this price hike also became very abnormal, and therefore this intervention became absolutely necessary. Of the previous sugar quota that was allowed by the government of 112 million lakh metric ton, out of that 107 lakh metric ton has already been exported, which is highest ever in the history of India. And still we are left with another 5 lakh metric ton balance quota that is available with us, and we should be in a position to meet the requirement of our neighbors in particular. In domestic market, by the end of September this month, we will still be left with a stock about 60 lakh metric ton, which is more than adequate for meeting our requirement of next 2.5 to 3 months. And as a result of this availability of stock, we have very stable prices of the sugar in the domestic market.
Okay, moving on, Telecom Minister Ashwini Vaishnav has called on telcos and tower companies to boost the quality of telecom service, also hints at reforms to improve the financial health of the sector. Listen in.
Power consumption in towers, that's going to be a big issue. I'll request the industry to come up with a good solution. We are willing to partner with you. We are willing to help you find a more sustainable solution. How can we use more and more renewable energy or something like green hydrogen or grey hydrogen, whichever, or some sort of other solution which can really reduce the carbon footprint of the telecom industry. That is one item which I'll request you to come up with some options. Then we work together, industry and government, we work together and find some good solution. We are targeting a very, very aggressive timeline. We should definitely cover at least 80% of the country in a very short time frame.
Okay, with that, we'll step into a break now. Up next, we'll get you all the cues from the commodities market. Stay tuned. Hi, welcome back. You're still tuned into Power Breakfast on CNBC-TV18, where we spoke about equity markets and a lot more. It's time to talk commodities now. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Morning, and thank you for that. Well, we are looking at the energy prices continue to surge. If you look at the Brent, that's trading at a one-week highs, and this is after the IEA report, which says that the demand for crude oil globally will pick strongly in 2023. It also says that there's a large-scale gas-to-oil switching happening in many countries, almost double of what we saw in the previous year. And then the US dollar index also has declined. That has been supportive. And the markets are looking at the likelihood of the US rail stoppage due to the ongoing labor dispute. That has been supportive, not just for the crude oil prices, but the US natural gas prices also gained nearly 9% overnight, and they are trading above $9 per MMBTU at this point in time. Decline, though, is what we have seen in case of gold prices. That has slipped below $1,700 per ounce. With the U.S. inflation almost near 40-year highs, the likelihood of a sharp rate hike on 21st of September when the U.S. Fed meets is something that's weighing onto the markets. So when you look at the precious metals and the base metals, those have started Asia on a weaker note.
Okay, so precious metals on a weaker note, but otherwise energy prices are higher. Equity markets indication is that they will open in the green. Manisha, thank you so much for joining us with all those updates. SGX Nifty, by the way, has seen some more buying from the lows. It's up 56 points as we speak, indicating that the start for our own markets, well, that could be in the green. And with that, we'll take your leave in this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next.